looks like the dust has really settled from what was a crazy market dip. And it looks like the market is set for a full recovery, and the recovery is being led by altcoins. But it's not every altcoin that's part of this recovery. And now what we're going to do today is look at the altcoins leading the recovery and see why those altcoins are the ones leading the recovery. And then we're going to see whether our thesis that this market correction is over is correct. So it's going to be a massive show. Let's get the show on the road, guys.
He's all about the DJ, baby. Crypto man. He's all about the DJ, baby. Uncle Ren's in charge. He's a crypto star. So savvy what he say. Fast money like a sports car. He's all about the DJ life. Make some money, change your wife. Big calls on the altcoins for the bull market hype. He's all about the DJ, baby. Crypto man. 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 Crypto man ran. Crypto banter. You got crypto questions, they got crypto answers. Jean-Claude Van Damme of the Banter fam. Could he kick it? Yes he can. Can he kick it? Yes he can. Crypto man ran.
It's all about the Degen, baby. It's all about the Degen, baby. Welcome back, Degens. I'm Crypto Man Run. I'm here today. I'm going to be here 3 times today, or maybe even 4 times today, right? There's an in the game show later, Freddie. Wow, there is going to be an in the game show today, and there's hot bargains in the game. So listen, if you're not watching our in the game show, watch it. It's going to happen in about probably 3 hours from when we finish the show with Hustle. Anyway, for those of you who are new to our channel, subscribe to our channel. Welcome. Subscribe to our channel. Join the family. Join the Banter fam. And this is the one place where we give away everything to our family. And today is going to be no different. Giveaways. That's so funny. As you say, giveaways, the Twitch people jump at the prospects of giveaways. Crazy. Anyway, subscribe to our channel. Also like this content. That is what tells people that we're here, that we're doing a good job. And we have been working our ass off to do a good job for you guys in this correction, in the good times and in the bad times. So welcome to our family. Should we talk about the Banter bags? We keep talking about the Banter bags. So let's see what came into the Banter bags today. So you see we have Polygen. Polygen is a decentralized launchpad. They gave us $3,000 of their money. That's now sitting in the Banter bags. It joins Credify, Symbiosis, Unix Gaming, Monkey Ball, Tiny Colony, X Hashtag, and Moonscape. Those are all sitting in the Banter bags right now. And remember, when we get to 700,000 subscribers, we're going to give the Banter bags away to the community. It's just going to give them away to the community. I think what we're going to do is we're going to take 50 people from the live show, and then we're going to take another 50 people from people who can't watch the live show, because we know that some people can't watch the live show, and they should be allowed to win. I mean, you shouldn't be exempt from winning because you can't watch the live show. So we'll pick people from the Twitter, from the live show, and we'll pick people from the comments, people that watch the show afterwards. So subscribe to our channel, comment, make yourself heard. Especially if you're on YouTube, because Twitch seems to have an advantage over you guys. Yeah. All right, let's get into it. Let's get into the big story of the day, and that is, of course, the question in everyone's minds as to whether it is finished, whether all this carnage is finished, and we're going into a straight bull run. And you can see that Bitcoin is now at 51,500. It is up technically 1% for the day, but it seems like everything is fine in the world. If you look at this tweet from Carl Davies, he says, "The flood has cleansed the earth and purged the devil's leverage. It is safe to leave the ark now, up only." So is that the case? Well, I don't know. If you look at what Delphi Digital say, they published their report and they published a tweet. And in this tweet, they said that leverage, if you look at this, leverage longs took a senseless beating over last week. And it was perhaps overdue. Bitcoin's open interest fell from 30 billion in late November, which was at the high, to 15 billion. So it kind of means that 50% of the leverage has now been completely wiped out. And if you believe, like we believe, that this is just a leverage shakeout in a healthy market, then you kind of look at this and you say, well, look, 50% of the leverage has been wiped out. It's still, the leverage is still not as low as at the end of the May correction. But the market structure has changed. The market structure has changed. Remember, at the end of May, we didn't have Bitcoin futures ETFs. And every time that somebody buys a Bitcoin futures ETF, effectively, what they're doing is they're increasing the leverage. So as these Bitcoin futures ETFs become commonplace in the market, and as more TVL, total value lock, goes into these Bitcoin futures ETFs by American investors primarily, then we're going to get this leverage ratio naturally increasing. And now the time has come for us to decide whether the leverage is low enough for us to continue in a straight line from this correction. And Delphi Digital further looked into the cause of the correction, and it's super interesting to see how this correction actually happened. Let's have a look here. So what really caused the prices to fall so quickly? The answer lies in an utter collapse of the market microstructure. And what they're talking about here is the perpetuals bid offer range. Now, usually the spread in the perpetual market for a $5 million order lies in the range of between 0.1% and 0.5%. So there's a hell of a lot of liquidity. And if you wanted to trade a $5 million order, then effectively you would get a range of about 0.1 to 0.5% on bad market days. Okay, but what happened here on this occasion? The spread for $5 million momentarily rose to as high as 2 to 11%, and that's this chart over here. So obviously on Friday, when the Fed announced that they were starting to taper, momentarily, for a very, very, very short period of time, the spread went from 0.1 to 0.5% to 2 to 11%. And so what happened there was that started a cascade of liquidations, because what happened with the liquidations is the price started to come down. As the price started to come down, more liquidations were triggered. And so we had this cascade of liquidations. And when this cascade of liquidations happens, it starts taking the price down and down and down and down and down and down. And that is the problem with the poison that is leverage, because leverage is so highly geared, it's so highly leveraged, that when the market starts to collapse, it starts to actually fulfill a self-fulfilling prophecy. So you get this, like, the self-fulfilling cycle. You get liquidations cause the price to go down. That causes more liquidations, which cause the price to go further down, which causes more liquidations, which get the price to go further down. And so you get the cycle. And that's exactly what happened. And it all happened because of this sudden collapse in liquidity. But now where we are is that the open interest is down 50% from the peak of November. So we've managed to flush out 50% of all the leverage in the market. And what we see here, interestingly enough, is that funding rates, which were positive, have now gone negative and were completely wiped out, or at least that's what happened. So why are the funding rates important? Well, if you want to take leverage, effectively, in order to take leverage, you have to borrow money. You have to borrow money to take leverage. And the more demand there is for this money, the higher the funding rate goes. When the funding rates go negative, it kind of means that people will pay you to borrow money from them to buy stuff. And so what happened here was the funding rates went negative. And so basically the longs, the futures, the open interest was liquidated, the leverage was removed from the market, the demand for new leverage completely disappeared out of the market, and people were actually paying you to take leverage. And then they finished this off by saying, Luna looks to be on a moon mission as the only top 10 coin in the green in the last 2 weeks. And that is Delphi Digital's summary of exactly what happened. Now, regardless of their summary, the sentiment has changed. Yesterday, we were at extreme fear. In fact, let's quickly look at where we were yesterday. So yesterday, we were at 16. Now we're at 25. We're not actually at 25 because I think this gets updated in a couple of hours. And when this gets updated, we'll see that actually, the Fear and Greed Index, I reckon it'll go up to about 33, 34. Let's see what happens when the market opens. But regardless of that, the sentiment has changed. We're back to normal sentiment. People are saying the flood has cleansed the earth and purged the devil's leverage. It is safe to come out of the ark now. Carl Davies also says, in a couple of weeks, I won't be able to even see the weekend's flash crash on a chart. Leverage traders are tiny-handed. Our tiny-handed VCs are out. Macro is meaning resume cycle. So that's exactly it. Everybody is saying resume cycle. You look at the stock market has also resumed cycle. And that is because they've realized that actually this Omicron virus has killed less people than Alec Baldwin. So you have this, I'm allowed to say that? That's a bit too soon, right? You can't say shit like that. You can't say that. So what you can see here is that the stock market has gone up about 1,000 points. In fact, let's look at it from the bottom. It's gone up about 1,500 points, or 6%, 5 or 6% since this whole thing started. And it looks like the stock market is now also our friend and also on track. So another metric which shows that we're bullish. Then you see that the whales are buying. So let's look at this. The first thing is supply on exchanges has completely dropped. And whales, so that's the supply and exchanges, completely dropped. You can see that over there. And you can see that the accounts of the whales between 1,000, people that own between 1,000 and 10,000 Bitcoin. So it's people like Fred and Luke, people that own between 1,000 and 10,000 Bitcoin. Well, you can see that they actually have been buying over the last week. So that little pink line over there is them buying over the last week. So it all looks like everything's fine. Everything is completely fine. If we look at some other whale metrics, the third largest Bitcoin wallet today added 2,702 Bitcoin at a price of $50,600 for a total of $136 million. So you're taking the third largest Bitcoin wallet in the world, and the guy here says, venture founder, he says, you already bought 8,117 Bitcoin in the low since November correction. Bitcoin dumped under 50. Now suddenly, what do? The third largest Bitcoin wallet buys another 2,702 Bitcoin in one day. Whales just keep accumulating Bitcoin, which is very uncharacteristic of a top of a market, because at the top of a market, it's actually the whales that are offloading Bitcoin. One more intro into large wallets. Here we go. This is another one. He says here, where there are blue lines, it means that the whales are buying. So bubbles show that currently belongs to whale wallets. The larger the bubble, the more Bitcoin was acquired by whale at that price. So what you can see is that there's a massive accumulation of whale wallets. So everything seems to be good in the hood. And if we look at our CoinGecko, if we look at the tokens that we're watching, which are on the CoinGecko list, it looks great. You have Spell token up 72.2%. You have Lovelace up 49.1%. You have Superfarm up 56%. You have UFO Gaming up 51%. Trader Joe up 40%. Loopring, the ETH Layer 2 scaling solution, 36.3%. D-Race up. I mean, look at this portfolio. Our altcoin portfolio today has bounced back huge. Look at this. 72, 49, 47, 57, 33. Mainly green, and we're talking big numbers in green, across some pretty big tokens. So today we're going to look at which altcoins are leading the race and this recovery, and why those altcoins are the ones actually leading the recovery. And it is altcoins leading the recovery, because if you look at the Bitcoin dominance, even though it spiked to 41.75 yesterday, it's back down at 41.5, and it continues to make these lower highs, and continues to come down and down. So we can see that altcoins are leading the charge, and I'm not the only one that sees this. In fact, if you look at Il Capo of Noia, he's basically plotted this out, and he says, well, look at the altcoin market cap, and it just kind of actually continues on this trend. We see that the leverage has been flushed out. According to Delphi Digital, 50% of the leverage has been flushed out. And we need to kind of make a call now as to whether we think enough leverage has been flushed out of the market for us to continue on this healthy bull market. Because this cycle just keeps repeating itself. It just keeps repeating itself. If you look at this, I'm not the only one who sees that the cycle keeps repeating itself. Here, Crypto Valerio says, Bitcoin really seems to like this pattern. It has already occurred 8 times in the past, now is the 9th time. The result is in all 8 cases has the same upside continuation after latest retests. And he posts a whole lot of charts which kind of show exactly that Bitcoin just keeps repeating its cycle. It's the leverage cycle that keeps repeating itself. And this account here, C3 Nick says, it is very efficient to play the leverage liquidation game again and again. The obscene amount of leverage is keeping Bitcoin in this range, bouncing between excessive greed and strong fear. And that is the leverage going up from here all the way down to here. And the cycle just keeps repeating and keeps repeating and keeps repeating. It's all about a healthy shakeout of an over-leveraged market. And now the recovery is being led by alts. And if you believe that, then you will believe that this is a buying opportunity. If you're trading, well, you probably should have tried to catch the dip. But if you're investing, and if you approach the thesis in the same way that James Lavish and I approach the thesis. Now, this is a reformed hedge fund manager, XGL, hockey, finance, and fintech private investment. He says, in 25 years of investing, I found that the big money is not made in trading. The big money is made in holding. And that's what I keep saying to you guys. If you're holding, then this was a great opportunity for you to buy, and maybe, in fact, is still a great opportunity for you guys to be buying. If you're trading, well, then you should have tried to pick the bottom, and maybe you would have got shit on your finger, or maybe you would have made some profits. I don't know. You would have got one or the other. Either shit on the finger. It's true, bro. I said it yesterday. True. You try and pick a finger, try and pick a bottom. You're going to get shit on your finger. Exactly. Anyway, the cycle repeats. The fear and greed keeps repeating. We're going to go from extreme fear to extreme greed to extreme fear to extreme greed to extreme fear to extreme greed. Now we are at extreme fear. We will make our way up to extreme greed, and then the cycle will reset and the leverage will get flushed out. And when this happens, you shouldn't act surprised. Like, don't act surprised. It's like, it happens. The same thing happens every time. We did call it, but we thought that the leverage gauge, that the crypto quant leverage gauge was broken. It wasn't. It was fine. It was perfect. We should have listened to our instincts. And look, lucky we didn't deploy too much cash into the market. We deployed about 20% of our cash in the market before this massive correction. And then of the remaining cash, we deployed 33% into the market. So we kind of called this correctly. But in hindsight, maybe we didn't deploy enough. At least if we think that this is finished. There is always the chance that we're going to get another bout of corrections to shake out more leverage. It is possible. We're in unprecedented territory right now. We've never had a situation where the Bitcoin futures ETFs are in the market and we've had a leverage flush out. So now this is the first time. So the question is whether this is the lowest that the leverage can go, and that only time will tell. So you're going to make a thesis now, and you're going to decide whether you're comfortable reinvesting into the market or whether you want to wait for another correction. And dollar cost averaging is probably a super strategy to deploy at this time. And if you're going to dollar cost average, probably you should look for the altcoins that are leading the charge and kind of look at why these altcoins have separated themselves from other altcoins. And I think that the first altcoin that we should look at is ETH. Because ETH is going through something like super interesting at the moment. And I'll show you what I mean. So let's look at the ETH BTC chart. This is the ETH BTC chart. You can see what happened to the ETH BTC chart since the correction. Let's look at the ETH BTC. Sorry, that is ETH. Let's look at the Ethereum Bitcoin chart, which plots Ethereum versus Bitcoin. You can see that when the correction happened, it shot all the way up to here. And I looked at why this happened. How is it that Ethereum performed so well in the correction? Well, the answer is kind of twofold. ETH is going through something very strange where its floors are actually saving it. Yeah, believe it or not, ETH's floors are actually what's causing it to go up in the cycle. So the two floors are high gas fees and no scalability, right? And the high gas fees actually in this market correction were a feature, because if you wanted to sell into the market panic, you couldn't sell because the gas fees were just too high. As I said to you guys yesterday, I tried to put through a transaction. The gas fees were like $800 or something. I was like, okay, I'm not putting through a transaction. And that probably happened to many retail investors. And so while people were dumping Bitcoin and other altcoins, well, ETH basically held its ground. And all ETH needed to do actually was just hold its ground. And because ETH held its ground, it increased in the ETH BTC pair. So that's the one thing that saved ETH in this this market cycle. The other flaw that Ethereum had, which is saving it, is the ETH layer 2 narrative. So because ETH doesn't actually work, because ETH is too slow, and because ETH is not scalable, it has given rise to all of these layer 2s. Now, the layer 2s are actually absolutely amazing, and specifically the ZK roll-up ones. So you've got all these layer 2s, this narrative of layer 2s, which is absolutely amazing. So even if you don't trust ETH and you think ETH is broken, well, you look at the layer 2s, and the layer 2s are actually amazing technology. And then you say, well, okay, hold on a second. Layer 2s may actually save ETH. And layer 2s, they're going to create this ETH saving narrative, and ETH is going to become like this clearing chain for multiple layer 2s. And so people that previously abandoned Ethereum, and I'll show you some of these people over here. I think I did keep something over here. So let's quickly go here and have a look at it. So this is ETH. This is what happened when the market collapsed. ETH BTC crash went straight up. And you can see that all the metrics for ETH remain amazing. So let's look at the net unrealized profit and loss. That usually goes to blue, to euphoria, at the end of a cycle, and it remains in green. So that metric looks so good. The percentage on exchanges is reduced. So you're getting this narrative that people are staying in ETH. Even Zhu Su. So remember Zhu Su, he's from 3 Arrows Capital. He's one of the smartest investors out there. He says, this is a tweet from a while ago, I don't know if you remember, but he abandoned ETH. He said, yes, I've abandoned ETH despite supporting it in the past. Ethereum has abandoned its users despite supporting them in the past. The idea of sitting around jerking off, watching the burn, and concocting purity tests while zero newcomers can afford the chain is gross. And he says, he went on, he said, Ethereum culture suffers massively from founder's dilemma. Everyone is already far too rich to remember what they originally set out to do. Perhaps a bear market is needed to remind them, or perhaps we must build elsewhere. And this was Zhu Su basically denouncing ETH and saying, look, I'm out of ETH. Well, the same guy that's out of ETH, we saw these transactions earlier where there were 2,000, 2,000, 2,000, 2,000. 3 Arrows Capital received 2,000 ETH, 8 million, 17 million, 25, 26 million. And so the buying list goes on. And this was picked up actually by Wu Blockchain, who was saying 91,477 ETH. That's $400 million worth of ETH in 2 days, including 77.47 hours within 2 hours were transferred from FTX, Binance, and Coinbase to the wallet marked by Nansen as 3 Arrows Capital. So the same Zhu Su who denounced ETH over here, exactly, that was the 21st of November. So 2 weeks later, bought $400 million worth of ETH. So the question is, was that whale games? Well, what is it? Is it whale games? The guy playing whale games? Not really. So he says, look, I couldn't let you guys jerk off watching the burn without me. ETH Layer 1 is unstable for newcomers. Show it to your grandma if you don't believe me. I'll still bid it hard at any panic on any panic dump like this weekend, obviously. 100,000 ETH is dust for what it's worth, more coming. So now he's buying ETH again. And what he's saying is, he's saying, look, even though I don't really believe in ETH anymore, I know that when ETH takes a dip, ETH is going to recover. And so he went all in on ETH, and he bought, he's saying, more than 100,000 ETH, because he said 100,000 ETH is dust for what it's worth. There's more ETH coming. So 3 Arrows Capital now buying Ethereum. And why are they buying Ethereum? Well, because they are bullish on layer 2s. And there is this whole layer 2 narrative which is carrying ETH. So as I said to you, ETH's flaws were actually its blessing in this correction. ETH's flaws, the high gas fees, caused people not to sell. ETH's flaws caused these massive layer 2s to be building around it. And the layer 2s are now lifting up ETH. So if you look at the layer 2s, and this is probably another way to look at altcoins which are driving this rally, let's look at Loopring. So Loopring is one that we don't talk about enough, but let me quickly call it up for you guys. Loopring is probably up 30% today. And that is because, here we go, 36%. And if you look at DeFi Llama, their total value locked is also up about 30% today. So you've got Loopring up 36% today. And that is, again, it's this whole narrative of these ETH Layer 2s exploding. We said this to you guys in November. We said, we think that the next narrative is going to be an ETH Layer 2 narrative. As these ZK rollups, these zero-knowledge rollups, and these optimistic rollups, and all these ETH Layer 2 solutions take place, for the next 3 months, there's going to be a very, very, very strong ETH narrative. Huge ETH narrative. Actually, so much so that I should probably check the ETH Sol chart. See if I'm going to eat fish. I'm going to check it out, because I know Sheldon's probably celebrating. Let's quickly have a look at you. No, I think I'm doing fine. It's actually not looking so good. Actually, when you bring it onto a bigger, if you take it onto a daily time frame, what date did we have that bet with Sheldon? Probably beginning of December. Okay. If it's beginning of December, I think I'm still fine. Barely, but I think I'm still fine. I think I'm still fine. I'm not going to have to eat that smelly fish. Okay, so ETH Layer 2 is pulling up ETH. And right now, you should be looking to invest in these ETH Layer 2s. If you want to be investing in these ETH Layer 2s, things like DYDX, things like Arbitrum, things like Loopring, which I've just showed you, things like Boba. You could also link up your wallet to zkSync and then just do a whole lot of transactions. We'll do a whole show on that, but effectively, all you have to do is go to zkSync, link up your wallet, do a couple of transactions between your wallets. Just send $100 from one wallet to the next wallet, to the next wallet, to the next wallet. Connect all the wallets to zkSync, and if they do have an airdrop, which is what I think is going to happen and what Elliot thinks is going to happen, then you'll just get free tokens. The same way that you got free tokens for using 1inch, or the same way that you got free tokens from all the other airdrops. Just keep doing transactions. You do transactions, you're going to get free tokens. I mean, it's so simple. It's so simple. Anyways, that's the narrative, the ETH narrative, which kept ETH flying. Yeah, let's get our wives back. Yeah. Let's look, what else is there? What other narratives are driving this bull market or this altcoin recovery? Let's quickly look at the altcoins and just see who's recovering and then kind of make a decision. You know what I saw? I saw Luna. Let's have a look at Luna. Let's actually look at Luna over here, because I think Luna Luna is about to break its all-time high again. It's about to break its all-time high. This token doesn't stop and isn't going to stop. Now, remember I told you, I think the reason why that happened, or one of the big reasons why it happened, we've been bullish on it for a month. In fact, we said Luna December. We called that in November. We said it's going to be a Luna December. I think Luna was at about $42 or $46 when we said that. And it continues to track on our thesis. And the reason, or one of the big catalysts why it tracked on our thesis, is because when the market was dumping, UST kept its peg. In fact, it kept its peg better than any other stablecoin, which was almost impossible to fathom 6 months ago or a year ago, that a stablecoin that is actually not backed by dollars, but rather backed by an algorithm, could hold its peg. It's just almost impossible to fathom. And so now what you're getting is a situation where Luna continues. Let me jump to these tweets over here. You're getting this narrative that people want to keep more of their US dollars in UST. And the way, and for as long as people keep accumulating UST, they're going to have to keep burning Luna. That's how it works. And this morning we got an announcement from Kucoin that they will add big pairs. These are like real pairs. Solana UST and Matic UST pairs. So now what's happening is exchanges are looking, and exchanges are saying, look, our users want to keep their funds in UST. We're going to allow them to keep their funds in UST. And by doing that, we have much more UST in circulation and many more uses for UST. And Kucoin is not the only company to do this. Injective protocol, which is a massive decentralized exchange protocol, says here that there's a proposal number 83 to list native Luna plus UST spot perpetuals and perpetual pairs against UST UST and USDT. So what you're seeing again is people are starting to become familiar and to trade in this UST narrative. And this is driving the UST chart. I mean, just look at that growth from the 24th of November to the 3rd or to the 5th of December. Another $1.9 billion US dollars, UST, were created, which means that another $900 million have to be burnt of Luna. There is a 27.8 million that must be purchased from the market and burnt this year because of all these UST that keep being minted. So for as long as this chart that shows the UST that's being minted is on the up, then they have to keep burning Luna. And if they have to keep burning Luna, they're buying it on the open market to burn it. Then Luna must continue to go up. And that's another token that survived the bear market, is almost printing all-time highs again. In fact, let's just see, the all-time high is 78. It's now at 72.85. And we're talking about like 3 days after the market correction, when Bitcoin is still back at 51,000. So Luna leading the charge. You got to be in Luna. We said it's a Luna December. We're saying that the next narrative is ETH Layer 2. We're saying that Cardano comes after that. Just keep listening to the narratives. Just keep focused on the narratives. If you're going to buy Luna, if you're going to adopt this Luna mindset, then you've got to be looking at the Luna ecosystem, because there are lots of things that are happening in the Luna ecosystem. If you understand, if Luna goes up, then the core building blocks in the ecosystem are going to need to continue to go up. Now remember, next week, Astroport launches. When Astroport launches, they're going to create huge demand. Astroport is the decentralized DEX, the decentralized exchange on Luna. And it's going to become the predominant decentralized exchange on Luna. And it's going to open for a lot of applications to start using Luna. And that's going to require more UST to be locked up. And for as long as more UST continue to be locked up, more Luna gets burnt. And for as long as more Luna gets burnt, it has to be bought on the open market. And if people are buying Luna on the open market to burn it, then by buying Luna now, you're front-running those transactions, which is exactly what those guys said. Anyway, if you are looking at the Luna ecosystem, what you'll notice in our portfolio today is that another protocol on the Luna ecosystem is also performing and continues to perform. And I said a month ago that it would perform, and it is still performing. And that's Anchor Protocol, up 16.7% today. Now, I want to just show you something. Despite the crash, let's look at Anchor Protocol in the last 30 days. In fact, let's go back 180 days so that you guys can see it in 180 days, okay? Look at the last 30 days. In the last 30 days, despite the crash, Anchor Protocol continues to go up. And the reason why Anchor Protocol continues to go up is because if you look at the total value locked, if you look here at Anchor Protocol and you look on DeFi Llama at the total value locked on Anchor, the total value locked is $7 billion. And that's up 30% in the last 7 days. So as the Luna ecosystem matures, what people are doing is they're going to Anchor Protocol. Let me show this to you guys. Let's quickly open the web app and you can see people are going to Anchor Protocol, depositing their US dollars here, and getting a 20% return for depositing those US dollars. So if you come here and you drop your US dollars, UST, you get 19.45%. And that's causing the TVL to go up. So for as long as more UST are being minted, more UST are going to flow into Anchor Protocol. And when more UST flow into Anchor Protocol, that should take the Anchor Protocol price up. And that's another narrative that you have to be following. Don't look at Luna without looking at all the tokens around the Luna ecosystem. Pylon Protocol, Orion.money, Anchor Protocol, Astroport when it actually comes out, Kujira, we've spoken about a lot. Look at the entire ecosystem as one. And that's another narrative that is leading this recovery, because if you look at Anchor Protocol and you look at Luna, they haven't had a correction. Anchor Protocol hasn't had a correction. Luna hasn't had a correction, despite the fact that the market has gone down almost 30% from its all-time highs. These guys haven't had a correction. What else? What else? Yeah, another one that I want to show you guys. In our altcoin portfolio is, here we go, Joe. Remember I said to you yesterday that I was trying to get more Joe, and yesterday when I spoke to you about it, Joe was trading at $1.89. Well, today it's at $2.63. It's 39. It's you would have made 40% in a day if you had followed that call. Colombian flu again, Freddie. On a Tuesday. Oh, goodness. Okay, so Joe, Trader Joe, which is the Avalanche DEX. It is like the predominant Avalanche DEX. It was a no-brainer to buy this one. And I'll show you why I think it was a no-brainer to buy this one. I showed it to you yesterday, but I'll show it to you guys again. When you look at Trader Joe, and you looked at it at $1.80, which was yesterday. Okay, so it was yesterday at $1. Let's just see this slightly better. So you go to yesterday, and yesterday Trader Joe was at like $1.89. There you go. It was a $1.81. And I said to you guys, look back to see when was the token this cheap. And the last time the token was this cheap was actually in October. And the first time that it hit that price was in September. So you were going back and you were getting Trader Joe back at September prices. And I said to you that is probably a good time to be getting it. The reason why you got to be buying Trader Joe is because Trader Joe is a real DEX. Look at the top decentralized exchanges by volume. You can get this on CoinMarketCap and on CoinGecko. But you can see that Trader Joe is the fourth biggest DEX by volume. So it's not as big as DYDX or PancakeSwap or Uniswap, but something is going on here. And it's always the fourth. It's always the fourth biggest DEX. It's always bigger than SushiSwap. It's always bigger than Uniswap V2. It's always bigger than all the other ones. It is the fourth biggest DEX. Now, the numbers don't lie. That means that volume is going through the Avalanche ecosystem. And when you see fundamentals and you see volume going through the Avalanche ecosystem, you say, hold on a second. When this thing dips and when it goes back to the same prices that it only hit in September, and you can turn the clock back 3 months, then it's probably a good buying opportunity. Versus if you take a Luna, for example, and you say, okay, at the crash, where did it go back to? It went back to $54, which kind of takes it back like 2 weeks. This one went back like a month or 3 months. And going back 3 months and being able to buy it, especially when the DEX is actually doing amazing volume, is like a no-brainer. It seriously is like a no-brainer. So Trader Joe was another one that I thought was a good one to buy. One that we should be looking at every time there's a dip. If you see a dip in Trader Joe, if it goes down to 180, if it goes down to 190, buy it. I mean, it's a no-brainer to be buying it. Anyway, let's carry on going down our altcoin list and see what else has been. What's going on here? Why has it stopped it? Okay, the other one that is, again, super performance is Spell Token. So Spell Token is magic internet money. This one is a collateral-based stablecoin, and basically you can stake your collateral and you can draw and you can create this magic internet money, and that's what they call the Spell Token. Let me show you. Let's go to their website. It's called Abracadabra Money. And the reason why it is flying because the total value locked is increasing and it's a great protocol. But the reason why it is flying is because Huobi is listing Spell, and Coinbase is listing Spell. So Coinbase and Huobi come out on the same day, and both announce that they're listing Abracadabra or the Spell Token, and that sent the Spell Token up 70%. And then you see just underneath it is Superfarm. Superfarm is one we've been telling you to buy. Yeah, let's spell Abracadabra. Hold on a second. This is a good one for Jimmy. Jimmy, spell Abracadabra.
No, thank you. It's been a long day. Not even for me.
Come on. Kyle, spell abracadabra.
Sure. It's been an even longer day for me than Jimmy. Starts with an A.
A-B-R-A-C-A. D-A-A-B-R-A. Abracadabra.
C-A.
Do I get monkey ball? Do I get something for my hard work? My hard work and dedication. I should get something. Okay, so that's another one. Superfarm also. So Spell token listed on Coinbase and Huobi. It does look like Coinbase and Huobi are kind of working together because Spell, Super, Fox, and IDEX are listing on Huobi. And on Coinbase Pro, you've got Spell, Super, Fox, IDEX, Covel, MCO. Are they working together? Does anyone know if they're working together? Is it a conspiracy? Because it seems like they're listing things together.
Yeah, they're both Super and Spell.
And Fox and IDEX.
Maybe it's an agency.
See, it's Fox and IDEX. So that is why Superfarm is running, and that is why Spell token is running. So Magic Internet Money is running. What else is running? Let's look at our portfolio and see what else is running. I did see that Tomb shares, T shares, were running. Now remember with T shares, the deal here is that what you can do is you can buy the Tomb token, and you can buy, which is a token that's usually pegged to Fantom. Now, if I look at the peg has been at about 130 to the Fantom price, and now the peg is down to 1.08, which means, again, it's a good time to start buying the Tomb token, which is pegged to the Fantom price. Now, of course, it can lose its peg. There are situations where it could lose its peg. But if you take this token, which is pegged, let me show you what you can do with it. I have to just open another browser with, here we go. I've got another browser open with my wallet connected. You can take the token and you can stake the Tomb token. So let's quickly look here. Let's look at Tomb. And you can stake Tomb with Fantom, and you can get a yield if you go to Reaper of 1,252 percent. And that's because what Reaper does is every 10 minutes, it sells your yield and then creates more of the LP token, and then you're staking more of the LP token. And so what they say is if you continue to do this, you'll get 1,252%. Whereas if you just leave your money on Tomb without the restaking, then you can probably get about 200%. Let's have a look. Oh no, we're not gonna connect wallets on the show. We're not gonna do that. No, we're not gonna do that. Not with these degens. Okay, now it's completely frozen. Okay. So we can't get into the cemetery and I can't show you, but you're probably going to get about 250% APY by just holding your Tomb. And so what we can see is that there are a whole lot of altcoins which are leading this altcoin charge. And if you're following the right narratives, you can make outsized returns in this recovery. But you've got to convince yourself that you think that this recovery is now well underway. And there is a risk. Remember, Sheldon said that there is a risk that if Bitcoin doesn't close over 53,000, then this is actually like a dead cat bounce. So let's keep our eyes on the leverage. Let's keep our eyes on the leverage. Let's keep our eyes on that $53,000 level. I think we're very, very, very far away from the $53,000 level now. Let's quickly have one last look before we go. Giveaways. Okay, so we're close. 51,662. Sheldon said we've got to try and close at 53,000. If we go over 53,000, we're over the technical levels. That could indicate that there is a real recovery in play and that the leverage has been shaken out. And for as long as the stock market continues to, wow, it's up again. So it's up 418 points now, 1.18%. For as long as this continues, then I think we got ourselves a game here. We've got ourselves a game. Cool, guys. So that's me for today. In fact, let's do some giveaways. Should we do some giveaways? Okay. Jerry Lim. There goes Twitch. There goes Twitch. Jerry Lim, Zion Trucks, I caught one. It's going too fast. I can't click on them. Okay, you got Amman Kuvera. What else? Okay, we got more Twitch people. Here we go. God bless his family, Mati. All of you guys win yourselves 500 tokens each of PathDAO, and that is PathDAO is the gaming DAO, the gaming guild DAO, which is launching right now on Copper Launch. I think those tokens are each worth 50 cents now, so that means that you guys are getting $250 at the pre-sale price or at the current sale price, which is amazing. Guys, I will see you guys again tomorrow. Until then, trade well, my friends.